want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Market Reaction. I'm Emma Wall and here with me today is Richard Jeffrey, Chief Investment Officer of Cazenove Capital Management. Hello Richard.
Hello.
So I thought today we'd talk about your outlook for 2015 and perhaps some of the risks that are coming up for investors, how economic uncertainty may filter down to people in the UK investing. What's then one of the big risks you think that we should be aware of?
Well, I think there are a number of risks, but the biggest risk is actually on our own back doorstep, and it's growth within the Eurozone. What we've seen over the past 2 or 3 years is that the Eurozone has really struggled to leave recession behind it. And even in the last year, many of the key economies have simply flatlined. And of course, the UK is heavily exposed to the Eurozone, and it is more damaged by the Eurozone than it is helped by the better growth trends in the United States. And the United States has genuinely picked up momentum. So I think that's one of the key risks for the UK.
I think a lot of people don't realise that Europe is our biggest market in terms of who we do business with. You know, 70% of the FTSE's revenues come from outside the UK, and what goes on in the Eurozone really does affect UK consumer, UK investor, UK stock market.
Very definitely. About 44% of UK exports of goods go into the Eurozone. So it's an absolutely key market. And it is very definitely holding the UK back at the moment.
And one of the other flags perhaps is what's going on in Japan. The third arrow maybe not coming off or maybe coming off. What are your opinions on that?
I don't think anything has really changed in an underlying sense in the Japanese economy at the moment. What they have engineered, of course, is a very sharp depreciation in the currency. So that probably makes them slightly more competitive in export markets. But it also, of course, risks getting a situation of competitive devaluations within that area. But the key thing is whether or not this government can get changes to take place in the way the domestic economy behaves. And there's absolutely no sign that that is happening. There are few signs that industry is behaving any differently, and there are few signs that the consumer is behaving any differently.
And one of the key things that's changed for UK investors, that is investors in the UK rather than just investors in the FTSE, is their opinion about emerging markets. This time last year people were very wary of them, but that has started to warm up. People are now getting back into emerging markets. What does the next 12 months hold?
Well, valuations in emerging markets began to look more attractive, and I think that's really what attracted pooled investors into some of those markets. But I still think we have to be very careful. You know, emerging markets really thrived when there was growing excess demand in the West, and that was the period prior to the recession. But of course, it was that excess demand and the extent of imbalance within the West that led to the depth of the recession. Coming out of recession, and we're now establishing new growth norms, those growth rates are not nearly as fast as the ones that we saw prior to the recession. We're trying to contain excess demand. We're trying to reduce the trade deficits of the West, and that is making it a much harder export environment for developing economies, particularly the manufacturing economies, but also, of course, the commodity producers feed the manufacturers. So I think in terms of economic activity, that's going to remain a difficult area.
So what do investors do then? Because we've outlined there 3 areas of which people may need to be wary. Is it about having no exposure at all, or just making sure everything's balanced?
I think it is, to an extent, making sure everything is balanced and not putting too much on one throw of the dice. There are a lot of economic uncertainties around, and I think we're still having to adapt psychologically to this changed growth norm, which is much lower. And our expectations of returns from financial assets have to come down. And we've come out of a period, not in 2014, but 2013 and 2012, when the returns from equities around the world were actually quite exciting. Well, actually 2014 was a more normal year when the returns come into some single digits.
Richard, thank you very much. This is Emma Wall for Morningstar. Thank you for watching.